What if the Social Security payment you're counting on doesn't show up when you expect it? Not because of the government, but because of new bank policies that were just confirmed. For millions of Americans who rely on Social Security, SSI, or SSDI, this isn't a hypothetical anymore. Quiet changes inside major banks are already affecting how deposits are processed, when funds are released, and what happens if your account information isn't perfectly up to date. And here's the most alarming part. Many people won't realize there's a problem until they check their account and see something's wrong. Over the past few weeks, new banking rules tied to fraud prevention, account verification, and deposit timing have gone into effect, and they're creating unexpected delays and disruptions for some Social Security recipients. These aren't rumors. These are confirmed policy shifts happening behind the scenes, policies that could temporarily freeze payments, reroute deposits, or even cause funds to bounce back if your bank flags an issue. Seniors, retirees, and people on fixed incomes are being hit the hardest, especially those who depend on direct deposit to pay rent, utilities, or buy groceries. In this video, we're breaking down exactly what's changing, why banks are doing this now, and what it means for your Social Security money moving forward. Most importantly, we'll explain the simple steps you can take to protect your payments before a small issue turns into a big financial headache. If you or someone you love depends on Social Security, this is information you need to hear. And if you value clear, honest updates that help Americans stay ahead of changes like this, hit the like button right now. It helps get this message to the people who need it most. Let's continue immediately, because once you understand what's really happening behind the scenes, the situation becomes clearer and more serious than most headlines are letting on. For years, Social Security recipients have been told that direct deposit is the safest, fastest, and most reliable way to receive benefits. And for the most part, that's been true. But the system that moves those payments from the U.S. Treasury to your bank account depends on layers of banking rules that most people never see. What's changing right now isn't Social Security itself. The payment amounts haven't been canceled, reduced, or randomly altered. What has changed is how banks are handling deposits, verification, and fraud prevention, and that shift is quietly affecting when and how some people receive their money. Banks across the country have been tightening internal policies in response to rising fraud, identity theft, and federal compliance requirements. This isn't speculation. Financial institutions are under increasing pressure from regulators to confirm account ownership, monitor unusual activity, and pause transactions that don't meet updated risk standards. When your Social Security payment hits a system that's become more cautious than before, even a small discrepancy can slow things down. For someone still working and earning income, a short delay might be frustrating but manageable. For someone living on Social Security, SSI, or SSDI, even a brief interruption can trigger late fees, missed bills, or serious stress. That's why these banking changes matter so much. They don't show up as a warning from the Social Security Administration. They show up as a deposit that arrives later than expected, or not at all, until the issue is resolved. One of the biggest factors causing delays right now is account verification. Banks are increasingly required to confirm that the name on the account matches the name associated with the incoming federal payment. If an account was opened years ago under a nickname, a joint account holder, or an outdated name format, the system may flag it. That doesn't mean your money is gone. It means it can be temporarily held while the bank confirms ownership. Unfortunately, many people don't find out until they call asking why their deposit hasn't posted. Another issue involves dormant or low-activity accounts. Some seniors use one account only for Social Security and little else. From a fraud monitoring perspective, that can look unusual if there's long periods of inactivity followed by a government deposit. Banks are now more likely to review those transactions instead of automatically releasing them. Again, this isn't about taking your money. It's about banks protecting themselves from liability. But the burden of that protection often falls on the customer. There's also increased scrutiny around changes to direct deposit information. If you recently updated your bank account, switched banks, or changed account types, your payment may take an extra cycle to fully process. The Treasury sends payments electronically, but banks still apply their own filters before releasing funds. If anything doesn't line up perfectly, The payment can be delayed or, in rare cases, returned. When that happens, Social Security must reissue it, which can take additional time. What makes this situation especially frustrating is that most people are doing nothing wrong. They haven't missed paperwork. They haven't violated any rules. They're simply caught in the middle of a system adjusting to new risk standards. And because these changes are happening inside banks, not at Social Security, many recipients don't know who to contact first. They call Social Security and are told the payment was sent. They call the bank and are told it's under review. Meanwhile, bills don't wait. It's important to understand that these policies are not targeted at seniors specifically. They're applied broadly across all account holders. But seniors are disproportionately affected because Social Security is often their primary or only source of income. When timing matters this much, even small disruptions feel enormous. Another factor that's becoming more common is automated fraud detection. Banks now rely heavily on algorithms to flag transactions. These systems don't understand context the way humans do. They see patterns. If something falls outside the expected pattern, like a deposit arriving earlier or later than usual due to a holiday, processing shift, or calendar adjustment, it can trigger a review. In the past, that deposit might have gone through automatically. Today, it may be paused. This is why some recipients are reporting payments posting later in the day than usual, or even the next business day. It's not because the money wasn't sent, it's because the bank released it after completing internal checks. While that may seem like a small change, it can throw off carefully planned budgets. There's also confusion around early deposit expectations. Some banks advertise early access to government benefits, releasing funds 1 or 2 days ahead of schedule. These early releases are not guaranteed by Social Security. They are a courtesy offered by the bank. When banks update their risk policies, those early releases may be delayed or temporarily suspended without much notice. That can feel like a disruption even when the official payment date hasn't changed. What's critical here is separating facts from fear. There is no confirmed nationwide cancellation of Social Security payments. There is no new federal rule saying banks can seize benefits. Federal law continues to protect Social Security funds from most creditors, and the Treasury continues to send payments on schedule. The issue is timing, processing, and verification, not eligibility. Still, timing is everything when you're living on a fixed income. That's why awareness matters. Knowing that these banking changes exist helps you respond calmly instead of panicking. If a payment is delayed, the first step is confirming whether Social Security sent it. If they did, the next step is contacting the bank directly and asking whether the deposit is under review. In most cases, the issue can be resolved with identity confirmation or a simple clarification. This situation also highlights why keeping account information current is more important than ever. Names, addresses, and account status need to align across systems. Something as small as an outdated address or an old joint account arrangement can cause unnecessary complications under stricter review standards. The broader picture here is that the financial system is becoming more automated and more cautious at the same time. That combination reduces fraud, but it also reduces flexibility. People are expected to fit neatly into systems that don't always reflect real life. Seniors who opened accounts decades ago are now interacting with rules designed for a digital-first world. What's reassuring is that these issues are usually temporary. Payments are not lost. They are delayed or held until verification is complete. But temporary doesn't mean painless, and it doesn't mean acceptable without explanation. That's why conversations like this matter, so people know what's happening before it affects them. Looking ahead, this is likely not the last adjustment banks will make. Fraud threats continue to evolve, and compliance requirements grow more complex every year. That means Social Security recipients may see more changes in how deposits are handled, even if benefit programs themselves remain stable. Staying informed is the best defense against surprise. If there's one takeaway from all of this, it's that silence doesn't mean nothing is happening. Just because you didn't receive a letter or alert doesn't mean systems aren't changing around you. Being proactive, checking deposits, reviewing account details, and understanding how your bank operates can make a real difference. At the same time, it's important not to let anxiety take over. Misinformation thrives when people are uncertain. Claims that payments are being taken away or blocked permanently are not supported by facts. The reality is more nuanced, less dramatic, but still important. It's about process, not punishment. As Americans navigate rising costs and financial pressure, reliability matters. Social Security remains a lifeline for millions, and protecting access to those funds should be a priority across the system. Banks, regulators, and agencies all play a role, but so do individuals, by staying informed and asking questions when something doesn't look right. This moment is a reminder that financial stability isn't just about how much money you receive. It's about when you receive it, how consistently it arrives, and how quickly issues are resolved when something changes. Understanding that empowers you to respond, not react. The more people understand what's really behind these delays, the less power rumors and fear-driven headlines have. Knowledge turns confusion into clarity, and clarity is what allows people to plan, adapt, and move forward with confidence, even when systems evolve around them. And that confidence is exactly what's needed right now, because financial systems don't slow down just because people are confused by them. Rent still comes due. Prescriptions still need refills. Utilities still shut off on the same dates. When Social Security payments arrive even a day later than expected, the ripple effects are real. That's why understanding these banking policy shifts isn't just informational, it's practical. One of the most important things to recognize is that these changes are not personal. When a bank pauses or reviews a deposit, it's not accusing anyone of wrongdoing. It's responding to automated safeguards designed to catch fraud at scale. Unfortunately, automation doesn't distinguish between a scammer and a senior who's been receiving the same payment for 20 years. That lack of nuance is where frustration builds, and it's also where patience becomes essential. Communication plays a huge role here. Many banks are not proactive about explaining delays unless a customer asks. That means people who monitor their accounts closely are more likely to catch an issue early, while others may be left wondering what went wrong. Simply knowing that these reviews are happening can change how someone responds, replacing panic with a phone call and fear with facts. It's also worth noting that banks are not all handling this the same way. Policies vary by institution. Some banks release funds quickly after automated checks, while others require manual review. Some notify customers immediately, while others don't. That inconsistency adds to the confusion, especially for seniors who may compare experiences with friends or family and wonder why their situation looks different. What doesn't change is the role of the U.S. Treasury and Social Security Administration. When a payment is sent, it's logged and traceable. That paper trail matters. It means there is accountability. It means funds can be located, verified, and reissued if necessary. Delays feel personal, but the system itself is still functioning. This is also a moment to recognize how much reliance Americans place on systems they rarely see. Direct deposit feels simple because it usually works. When it doesn't, it exposes how many layers are involved: government agencies, clearinghouses, banks, and internal compliance departments. Understanding that complexity doesn't fix the problem instantly, but it does make it less mysterious. For seniors and those on fixed incomes, knowledge is leverage. Knowing what questions to ask, who to call, and what's normal versus unusual can shorten delays and reduce stress. It also helps prevent people from falling for misinformation that claims payments are being eliminated or seized. Those claims spread fast, especially during periods of change, but they don't reflect reality. The larger takeaway here is that financial systems are evolving, and adaptation is part of that process. Not every change is communicated clearly. Not every update comes with a headline. Sometimes the only sign is a deposit that arrives later than expected. Being prepared for that possibility makes all the difference. Ultimately, Social Security remains a foundational support for millions of Americans. That hasn't changed. What's changing is how carefully money is moved, reviewed, and released within the banking system. Understanding that shift allows people to stay ahead of problems instead of being blindsided by them. Clarity replaces fear. Information replaces rumor. And when people know what's really happening, they're better equipped to protect their income, plan their expenses, and move forward with confidence, no matter how the systems around them continue to evolve. As we wrap this up, here's the key point to remember. These new bank policies affecting Social Security payments are about added security and compliance, not cutting benefits or blocking money. The money you're owed is still coming. It might just take a little longer to reach your account as banks do their extra checks. That means staying proactive is your best defense. Keep your account information updated, monitor your deposits closely, and don't hesitate to contact your bank or the Social Security Administration if you notice a delay. This moment is a clear reminder that even trusted systems can change quietly, and those changes can impact millions without a big public announcement. But when you understand what's happening behind the scenes, you're not caught off guard. You're empowered to act quickly and avoid unnecessary stress. The reliability of your Social Security benefits matters, and so does your peace of mind. With a little awareness and vigilance, you can navigate these new banking policies without missing a beat. The money you depend on is still yours. It's just moving through a system that's adapting to protect everyone's financial security. Stay informed, stay calm, and stay ahead of the curve. And if you found this breakdown helpful and want to keep receiving clear, accurate updates that cut through the noise, be sure to hit that like button and share this video with anyone who depends on Social Security too, because knowledge is power, and together we can make sure no one gets left behind.